Hello, everyone. This is Alexander Horat with the Free American Press, and today I'm going to be having my mom on the show, and she is actually a broker for Gold Country Properties. It's a family-owned company, which I work with her doing real estate here in Northern California. And today our topic is going to be interest rates and housing affordability. And would you like to lead us off in that?
Sure, thank you, Alex. So yeah, we not only assist homeowners and sellers, buyers and sellers in real estate transactions, but we also help with providing some research and latest information on the real estate market and how it relates to the overall economy so that we can make better decisions. So we have seen this whole 2022, we have seen an increase in the real estate prices and also an increase in interest rates since January of this year. They have the Federal Reserve Bank has increased the interest rate 7 times, and it went basically from around 3% to about 6.5% now. So what is that doing to what is that going to do to housing affordability, where you can, if you were to buy a $300,000 house, your payment would have been around if you put 3.5% down, which is the down payment for an FHA loan, your payment would have been like right around $2,000, close to $2,000. But now your payments are going to be closer to $3,000, so that for the same house. So what's going to happen with housing affordability? Well, obviously, people are not going to be able to afford a $300,000 home where they could before. And as a result, prices will come down as they did on the 2008 crash. And so it's very important that if you are considering, if you're wanting to move, if you're wanting to relocate, you don't want to wait until interest rates get any worse, because there is no end in sight to what's going to happen. I just want to quickly show the information from the National Association of Realtors here. And this is just the count, all the counties in the US. 1 second. Okay, so let's look for Tuolumne County over here. So the median home value is $370,000. Okay, that's being for 2000 for this last quarter, 2022, third quarter of 2022. Now let's plug those numbers in here so that we can see. So 360,000. If a first-time home buyer puts 3.5% down, that's 12,600 with a 30-year fixed. Let's change the rate here to like 6.5. Okay, and the taxes is about 1.10% of the purchase value. Homeowners insurance in Tuolumne County, this is just an example, but other counties in California have the same issue. Fire insurance is astronomical in our areas. $2,000 a year, let's say conservatively. So you're looking at $29.76 a month. That includes taxes, insurance, PMI. So, and of course, principal and interest for 30 years. If you compare that to, let's say 3%, which we were at that not very long ago, that was what your payment would have been. So what we need to do is really assess if you have a mortgage on your property, especially if you own it free and clear. Of course, there's going to be an even exchange. Basically, when you sell your home, if the prices go down, they're also going to go down someplace else. But while you have any equity on your home, and if this is what you are planning on doing, downsizing or moving out of state, your best bet will be not to wait too much longer, because the equity is going to eventually be wiped out, just like it happened in 2008. In a county like Alameda County, down there in the Bay Area, you will find a home that was worth around 2005-6, it would have been worth 700,000. About 2008 was worth like 475. So that's almost a half. Almost all of the equity that somebody would have gained would have been completely wiped out. So that could be the case here. And they're predicting that we might have an even worse crash than what happened in 2008. So it's imperative that we definitely look at that. And if you have equity, then it would make sense if you're planning on moving to do it sooner than later, where you can use the equity, the cash, to be able to buy something else free and clear, and not have a mortgage.
Yeah, I think that's definitely the wise thing to do in this situation, is not having any debt, because you want to own your house free and clear so you can be better positioned for what's happening. I think it's a developing news story. They're saying that the stock market also is having the worst time of it since 2008. And as you said, the Federal Reserve plans on raising interest rates. And here's just an article showing that. So it says that the Fed key benchmark is projected to rise another 3/4 of a percentage point in 2023. So this is what the Federal Reserve is saying, hitting a 17-year high of 5 to 5.25% from its current 4.5% level. So it's basically going up another percentage point. And if they continue raising the rates even more than what they're saying, then it's going to be a lot worse than what it is right now. So I think you're definitely right that even the Fed chairman Powell is saying inflation battle not won, more rate hikes coming. So that's going to continue slowing the real estate market. We're probably going to see houses on the real estate market stay on the real estate market much longer, even if the house is priced right. In the future, it may take longer for it to sell. And we've actually been seeing that trend rise, unfortunately. So I definitely think you're right that it's a good time to sell now, because heading into next year, they plan on raising it again and continuing doing that. So that's just going to make everything harder. And like you said, also, it could eat your equity, because if you have equity in your house, but your house is going way down, that equity goes away because you can't sell your house for the amount of equity you have in it anymore. So that's definitely going to make things harder, especially since new homeowners aren't going to be able to buy a house because they're not going to be able to get loans or be able to pay such a high loan. So it's really going to be only people who have cash on hand who are going to be able to buy a house. Is kind of my thought.
The other thing to think about that applies to homeowners, but what about investors? How is the investment environment going to look like for real estate in the years to come? And of course, as long as someone is making a profit, it will be worthwhile to get a loan, as long as they're making a profit. But
Right.
you can see now, for a $360,000 house, for instance, here in Tuolumne County, probably a 3-bedroom, 2-bathroom home rents for no more than about $2,000 in Tuolumne County. And you'll have a hard time finding a renter at that price. Well, if your mortgage is going to be now $2,800, or even if it's at $2,500, even if it's at $2,300, you're going to be on the negative now. So it's not going to be worthwhile to rent a home unless you are putting a substantial amount of money down, if you're putting more than 20%. So let's just take a quick look and see what it would take. I'm just going to go back to that screen where we were at.
Okay.
So if somebody was to put 20% down, and let's say, because you're putting bigger down payment, that your interest rate is now going to be 5.9. Okay, well, I'm just making assumptions here. You definitely want to check with your lender. Okay, your payment now will be $2,205. Okay, that includes insurance and taxes and your principal and interest. Okay, so if you're pushing it and trying to get $2,000, I mean, you're not going to be making a huge profit here. You're not going to be making any profit. You're going to be losing money at these figures. So how much money would you have to put down to see a profit? Okay, so then you have to play with the numbers and see, do you have to put 30% down or 40% down? 40% down, your payment, including taxes and insurance, is $1,847. That's still cutting it close. If you're willing to only make $150 profit, what about if you have to make an improvement or a repair? So basically, the smaller the better for your investment, possibly. And I'm thinking Mobile homes might be, if you're just looking for income, cash flow, and you don't have a whole lot of money to put down, mobile homes might be your best bet. If you have a lot where you can put them on, and if you're in an area where you're allowed to put these, but of course, in California, there's a lot of regulations and a lot of red tape that you have to go through in order to do anything. So it becomes a little bit prohibited here to do certain things, but this is where a lot of people need to look at a state and look for a place where you don't have to pay, the taxes are not as much, or your homeowner's insurance is not going to be ridiculous like it is here.
I think the unfortunate thing is we're going to see a repeat of 2008, where a lot of people are going to be losing their houses to the bank because, number one, the rents aren't going to cover what they put into it, like you were saying, and they're not going to be able to keep the upkeep going. So it's really a smarter idea to sell a more expensive house while you can, to get a smaller house that you can actually afford when the going gets rough, so you don't lose everything. Because that's kind of the consensus, right? You think we're probably going to see a lot of houses lost to the bank going into next year as they increase interest rates.
Yes, unfortunately, that's what we saw in 2008. There was a lot of foreclosures. A lot of people were upside down with their mortgage. They owe more than what the house was worth. And that happens when the equity, basically, the inflation that we're seeing also is a hidden tax and is eating away people's, profits and equities, not just in the real estate, but we've seen it also in the stock market. And of course, we've seen what happened with crypto. So people have to diversify and figure out what's the best for them. But if you're looking to move, don't wait any longer. Make the move now, and definitely have a plan. A lot of people are still moving out of state and to be able to find cheaper homes, even though prices in other states where people are moving to also went up. So, but that's where, if you have the equity, if you have the money, that the proceeds that you can get out of the sale of your house, you'll still have an opportunity to reinvest and possibly own something free and clear, or for the most part, have a mortgage.
And it might even be a smart idea for someone to sell their house and put the cash, away until the real estate market continues to go down, and then
Yes.
buy something.
Especially if it's your primary residence, well, you have the exemption, 250,000 if you're single, 500 if you're married, so that you don't have to pay taxes on the capital gain if it's your primary residence. If you're in a position to do that, say you have another place in another area and you can hold onto your cash for a while, of course, that'll be the best bet. If you have to reinvest, and you have to weigh your options, because if you have to reinvest and you don't, if you have an investment property, then you have to pay, close to 30% tax for capital gains. So you definitely want to make sure you talk to your tax advisor and a good 1031 exchange company, which, by the way, we can recommend.
Oh, yes, definitely. And you're right. It seems like there's no end in sight with inflation and rising interest rates, unfortunately. So do you have any other real estate predictions or anything else you think is going to happen next year?
Well, I think that's the biggest prediction, the rise in the interest rates. That's basically already being told by the Fed. So it's really doesn't take somebody to have special skills to figure it out. You just got to look at what they're saying, and
Right.
just kind of do your numbers and calculations from that and figure out where you want to be in this next coming year.
I definitely agree, and it's definitely important to protect your family, your assets, your wealth, and making sure it doesn't get lost to a bank or to property tax or to anything like that. So that's definitely what we can recommend, is protecting yourself any way you can, and
And
you can definitely.
yeah, if you have to get a mortgage to buy something, make sure that even if you sell your house and you have some equity but don't have enough to buy something to live free and clear, you just got to make sure that you buy something somewhere where your mortgage now won't be more than the mortgage that you're paying currently. Because if you had a mortgage at 3%, and you had a $300,000 house and you were paying $1,500 a month because you have a lot of equity, say you have $100,000 in equity, and now you decide you want to move to another house that might be 250, or even around the same price, in another area, but you like the other area better, or the house better, but you're still going to be paying, even putting $100,000 down, you're still going to be paying a substantial amount, probably even more than what you're paying for interest now
Yeah.
for current mortgage. So you have to weigh all those options before you go through the hassle of putting your house on the market. Just make sure that you do your homework and you understand everything, because the worst thing would be for you to have a homeowner to have their home on the market and have a buyer for it, and then be in the middle of the whole thing, and then just to figure out that it's not gonna, the numbers don't work out at that point. So you definitely want to have a good idea of what you're going to be going into before you make that decision.
I definitely agree. It's important to do your due diligence and your research before you make such a big move, to make sure everything makes sense, because if you don't have the money for a new house, then you're just going to lose it, unfortunately. And you
Or
don't
even
want
if you
that.
have the money and you could afford it, but then you have to see, okay, the interest rate, because the interest rate went up, your payment's still
Yeah.
going to be the same, even when you put all your equity into the new house that you're buying. Your
Right.
payment's still going to be the same or more. So you're really, or in many instances more. So you have to make sure that the change that you're making is going to make sense.
I definitely agree. And is there anything else you'd like to add in this video at all?
No, I mean, we're seeing the consequences of all this fiat money that has been the case, that debt back money that we have had for many, many years. And we're just seeing the consequences of that system. And because money hasn't been backed by gold for a long time. So now we're just going to start seeing the consequences, and we just have to make sure that we're all prepared.
I definitely agree. The Federal Reserve really printed us into this disaster. Now they're raising interest rates because of all the new money they made. So it's definitely time to prepare and make sure you're not wiped out in the coming disaster. And I would just like to thank you for coming on the show today and giving us your insight on the real estate market. And if anybody is interested in selling their house or buying a house in Northern California, you can definitely contact us, and we can definitely help you with that. And I would just like to say thank you for all the viewers who are watching this video, and I hope you all have a good rest of your day. Thank you, and God bless.
Thank you, Alex.